Open your mind's door to J-Snip 4. Open your mind's door to J-Snip 4. American dream, relocated to Tennessee. Now he's on 10 acres, GMO free. Planting info seeds in the minds of the sheep.
So I recognize that Friday was a spectacular smashing of gold and silver. Gold was down like 70 something dollars. Silver was down, I think it ended at $1.70, something like that, you know. So I said, man, I probably should do a video just to remind people that I told you and told you and told you they would do this. That my gut feeling was that they were going to hit gold and silver hard. And when they did hit it hard, it was going to be that final push. And that whatever that bottom ends up being, I don't know if it's going to be the low 20s, 20, 15, $10 silver. I don't know. But what I do know is that I told you this would happen, and that if you're holding physical silver on the sidelines, meaning not playing the paper game, you are immune to this type of thing. They are flushing out every last stop position in the paper silver market to close out automatically these paper accounts that people are having that are open by pushing the price so low. Silver right now, and again, this is the overnight market because it's Sunday, fixing to be Monday. Silver's down on top of Friday. It's now down $1.20 today. New York Times was what it's showing here, but whatever. $26.23. And the low is $24.08. It's since climbed a little bit, believe it or not. And the current price is $24.65. So it's down $1.20 right now. This may scare people. This may, man, I'm in at $30. Oh my God, I even bought when it was 40. Oh, and in the pit of your stomach. I'll tell you what. Go out and try to buy some silver. Go ahead. Go out and try to buy some silver eagles right now. As the price is plummeting, go and try to buy any kind of quantity. I'm not talking about going to eBay and picking from the bozos who are selling on eBay because they got scared. They got the tree shook and they fall. The leaves fell. I told you this was going to happen. I told you, remember when Bob Chapman, before he died, and he died fairly recently, where he said $30 or $29 thereabouts, $29, $30, it's the bottom for silver. It's not going below that. Even Jim Sinclair, of all people, the gold expert, the guy's been in the market his whole life, was an advisor to one of the, was it Paul Volcker, former Federal Reserve head, was an advisor to him, and he said, even he said, there's a bottom, and it's, I don't know what his number was, 1,500 or thereabouts, 14, and then someone else was saying it's 1,480, and this coming week will be the most important time to watch it to see if the low's been breached, and it's breached. It's 1,440 right now for gold. None of that matters. Their opinions on where they say this is the bottom, none of that matters. They're still right that gold is going to the moon and silver is going to the moon in price. Their lows and technical charts, I already said I don't look at any of that. It doesn't matter. I used to look at that stuff. I've even done videos where I'd show some of the charts, and it doesn't matter. This was long ago. Why doesn't it matter? Because they can push the price above or below what the charts and the technical analysis says by dumping paper silver. They are not dumping real silver. They are dumping paper silver, which are bets on a bet on the movement of silver. It's like a whole massive amount of people are betting on which way gold and silver is going to move. And the thing that sets the price of gold and silver is nothing more than the betting of the price. The physical asset isn't setting the price. You have to understand this. You have to understand how all this works. I wish, oh my God, do I wish I had a little extra money right now. $24.65 silver. You know how many people thought I was nuts I told you I had around $3,000 back in 2008, early 2008. I was playing the wheat market. Again, old bozo J Snip 4 didn't know anything back then. Didn't realize markets were rigged. Didn't realize a lot of this stuff. And I said, I can do this. I can play the market. I can play commodities. I'm back here all day at my desk. I can put in my stop positions. I can put my buy, my sell. I can do it all. I don't even have to sit here and watch it. Man, if I could just make a little, like $100 a day doing this. I thought to myself, on top of my salary, which was a pretty good salary I had back, in Florida. Man, I could really make some pretty nice side cash, you know what I mean? So I got in on wheat, and wheat started skyrocketing. I was making money. But I'm also reading the news and reading things online that, what I call news, alternative media, and I'm realizing people were killing themselves, literally fighting and killing each other over the last specks of bread that were left from the Egyptian government to the poor people, because the Egyptian government had to import that stuff, namely from places like America, had to import the wheat, and the wheat was skyrocketing. And I'm thinking to myself, if I get in, which I did, I didn't know this, but I got in on it, made some money. Hey, this is really cool. I can do this again. Buy, sell, buy, sell, buy, sell. I can do this all day long. This is great. A little conscience hit J Snip 4. Man, people are killing themselves over just trying to eat. They don't care about the stock market and price. They just want to eat. And if other people like me are in here to make money, we're causing the price to go up, because it's all of our fake bets, right? The bet on a bet of a price of something. Same thing with wheat and corn. It's a commodity, just like gold and silver. So it's just paper that there's no real asset there. It's more paper. So the paper, people are creating a bubble, fake bubble, causing real people real trouble in their lives, starving and killing each other for the last pieces of bread. Couldn't do it. Got my money out immediately. I can't be a part of that. What can I do? Looked over at silver. Silver wasn't moving that much, but I looked at what it would move during a day on average and said, man, I could at least make $70 to $100, sometimes more, on literally a 10-cent move. A 10-cent, not a $10 or a dollar, a 10-cent move in silver would net $100 on a mini futures contract. I didn't have a full size. Full size is 5 times what I was playing with. I had a fifth of that I was playing with. And I had my $3,000, and guess what? I was making money on the silver. Well, I didn't think, okay, no one's getting hurt by the silver prices. Okay, good. I feel like a decent human being. Let me get back in the market. Silver was around $20 or so. JP Morgan, with the Lehman Brothers collapse, they inherited the short position, smashed the market, destroyed my whole account. $3,000 gone. 2,000 of it was the account. The other 1,000 was the what they call maintenance amount. That was wiped out. Margin call. You owe us a couple $100, whatever it was, on top of losing your entire account. I said, you know it's going to go back up short in the near future. Why did you sell my account? You could have called and just asked me to put more money in the account. It doesn't work that way. It's all automatic. We sold it at your stop position you had in there, but no, there were no buyers. So much was sold. There were no buyers. It got down to $17 an ounce before there were any buyers, and that's when your account got liquidated. Oh, that's interesting. I didn't know that could happen. I got cleaned out. $3,000 anyways. I lost it all. Had I sat on the sidelines back then when silver was $20 an ounce, how long has it been well over $20 an ounce the last few years? It's been over 20. I would have had nothing to lose had I played the silver physical market. By the way, I did have physical silver then too. But I thought I could play with this market thing like I hear people making money online. I should be able to do that too. I'm kind of an intelligent guy. I can watch charts and look at stuff and figure the highs and lows. But that's what led me to understand there's a market rigging force out there. I thought it was just a rainy day. Old J Snip 4 got caught. My mistake. It's my fault. No one else's. I shouldn't have played the game. I, went through all those thoughts. JP Morgan did it. Oh, okay. Gotcha. So long story short, all the research I've done, as I've explained, the SLV, the GLD, these paper pieces of garbage, I looked at their prospectus. It's plain as day. They can close them down for any reason. If market turbulence is too much for us, we can close the account, the whole thing down. There'll be no GLD, there'll be no SLV. We'll just pay you off in what today's price is. Have a nice day. And I've said this numerous times, even more recently before this waterfall crash that's happening now, and Friday, 2 days ago. I said, still, months and months later, when I had the feeling and had the research in my head, knowledge, said, man, they're going to destroy it again. They have to. And people are telling me, no, it's not going to go below 30. And again, same with Jim Sinclair, same with old, one of the guy's name I just mentioned a minute ago who's now passed away. It's not going below 30. I said, man, it can go way below 30. It's not going to stay there, but they control the price on their exchanges. So why did they need to do this right now? Ready? Why are they needing to do this now? Why was Friday the go date for the elite smash the silver market? And then Sunday night, technically, Monday morning, smash it some more. I just told you a matter of days ago, before this happened, by the way, this smashing, that 10% of COMEX silver inventory, physical silver that the COMEX has on hand, allegedly, and they may have it because it was only around 40 million ounces or so. 10% of it was gone in a flash. Literally a day or two, or a little over a day to 2 days. 10% gone. Somebody wants some silver. Somebody's demanding delivery. Somebody is requesting physical delivery and in a massive quantity. How do you deal with that if you're the COMEX, if you're the club, and you recognize, holy crap, there's physical demand like that we can't handle? Which can be seen by Germany saying we want all of our gold back and us telling them, you'll get it in 7 years. We'll see you in 2020. What? They gave us the gold. We're storing it in a secure vault with guns and protection. No one can get in and out. Like I've told you before a million times. And it's obvious because the Federal Reserve slipped up one time in one of their meetings and they flat out said something about the word gold swaps and leasing. Huh? What? Whose gold are you swapping, and whose gold are you leasing, and to whom is it being leased to, and when do you get it back? They didn't go that far, but they did let it slip that it is being leased out and there are swaps. So, Germany, listen, about that gold we owe you guys in 7 years. I think we know where or whose gold's been swapped. To whom it went to, we don't know. That's the key. It doesn't really matter, though. The bottom line is they don't have the physical gold and silver to deal with the demand right now occurring, even on their own piece of crap exchange known as the COMEX. Demanding deliveries is killing them. It is destroying them. What else can they do? How do we stop this massive influx of people taking out physical silver, even playing our rigged game, and still somehow able to pull silver out from us? Some big players can do that. How do we stop it? Crash the market. Because all of these people who are demanding delivery, there's other guys out there with the futures contract who gives the rest of the money and says, I also want delivery. We can't have that. And every month, there's always a certain number. Go look it up for God knows how long a period of time you feel comfortable with. Look it back up and just notice every month, even whether it's a strong silver and gold month or just a normal non-strong silver and gold month as far as deliveries are concerned, and you'll notice there's always deliveries taking place. And for the last 2 years, there are deliveries taking place during months in which there usually aren't really any. So, they're having to deal with that. And this 10% being cleaned out like that, red flags, alarms are going off. Oh my God, we can't handle this. What do we do? What do we do? They already know what they have to do, and they just did it. Crash the market. You will rattle and shake and destroy investor confidence in the gold and silver markets because you've just breached the low of the lows of the technical chart. No matter which one of these charts you want to look at and connect the dots, it doesn't matter. On that low level, which it fluctuated, from person to person, it may have been $1 difference of where they think the real low is. It doesn't matter. We're below that now. okay? They have to shake the weak hands out. And I want to read you something which I have full permission to read in case any clowns over at YouTube decide to try to pretend I'm copywriting something. I have full permission to read this. And this gentleman by the name of Paul, which I'm going to look this up to give you his exact title. Former Assistant Secretary of the United States Treasury, Paul Craig Roberts, former Assistant Secretary of the U.S. Treasury. Allow me to read what he wrote about this smashing on Friday, not even what's happening today. He spells it out perfectly. As I've said before, when they would smash it, not Friday and not today, but prior smashings, I'd say, look, they just covered a massive amount of short positions. Whoever's holding these short positions that just took this beating is getting destroyed. And I said, there's not a chance in hell that a bank or an investment firm or as JP Morgan says, we've got a client. Our client or clients are the ones with our short position in silver. They choose to do it, and we just are the facility they use to go through to make that exchange, or that, we're the exchange, so to speak, for them, or the broker, whatever, for them to do that. That's what JP Morgan said. And I said, you know what? JP Morgan might not be lying. They might be telling you the truth. Jamie Dimon may have told the truth. Who's their client? It's the federal government. Or, same thing, Federal Reserve. And the Assistant U.S. Secretary of U.S. Treasury has something to talk about on that. Because, as I said, there's no chance that any investment firm would be losing their rear end constantly to the prices up in silver, and it has to get smashed back down, climbs back up, they got to smash it back down, climbs back up, they got to smash. No one in their right mind would still be in business. They couldn't be in business today, taking the beating that has been given on these shorts. As I've said this before, only a freaking government has the funding to endure that type of a beating. And Mr. Paul Craig Roberts gives you the exact amount of the beating, roughly, that just occurred on Friday, not including what's happening right now. Assault on gold and silver. Update, Paul Craig Roberts. This was from earlier today, not before the markets opened again and another smashing occurred, okay? And he says, note, readers point out that gold weights are based on metric tons and troy ounces. So 500 metric tons of gold would be just over 16 million troy ounces. And when you hear that kind of number, by the way, for gold, like you could hear that number for silver and it'd be like, holy crap, that's a lot. But when it comes to gold, they don't move that much gold like they do with silver. When you see the numbers of silver, actual ounces. So that's a massive amount of movement of gold. So he says this changes the arithmetic slightly, but it's not the point. I was the first to point out that the Federal Reserve was rigging all markets, not merely bond prices and interest rates, and that the Fed is rigging the bullion market in order to protect the U.S. dollar's exchange value, which is threatened by the Fed's quantitative easing program. With the Fed adding to the supply of dollars faster than the demand for dollars is increasing, the price or exchange value of the dollar is set up to fall. They have to smash gold and silver first, just like I said a matter of days ago. They have to do this first before they start to let loose on the US dollar and the dollar starts tanking. Because if they don't, the price of gold and silver would be skyrocketing prematurely. So they have to crush it first, then let the dollar do its dance, and not in a good way. And then when the pundits and the bozos come out on the news, oh, gold's back up again, silver's back up again, it'll be because of the crashing of the dollars going down, when in reality, the price of gold and silver should be way higher than it is now anyways. But again, as I said, Lindsey Williams said they want gold at $3,000 an ounce and they want silver between somewhere around $75 to $100 an ounce. That's where they want it, the elite. Therefore, it won't be going lower than that when the time comes. And the time's coming. How do I know? Because of the waterfall smashing Friday and then Monday. So, let me continue to read this because this has a lot of good information in it. It will all make sense. And you will realize, oh my God, if you can get your hands on physical silver now, today, tomorrow, wherever the hell this bottom goes, as I said the other day, when this happens, you better get the freaking credit card ready. You better be prepared to max out the credit card because this will be the fall of the falls. Here we go. A fall in the dollar's exchange rate would push up import prices and thereby domestic inflation, which I mentioned to you the other day about my dollar devaluation video. I just said it. A fall in the dollar's exchange rate would push up import prices and thereby domestic inflation, and the Fed would lose control over interest rates. The bond market would collapse, and with it, the values of debt-related derivatives on the too big to fail banks' balance sheets. The financial system would be in turmoil, and panic would reign. Rapidly rising bullion prices were an indication of loss of confidence in the U.S. dollar and were signaling a drop in the dollar's exchange rate. We can't have that. The Federal Reserve used naked short positions in the paper, gold, and silver market to offset the price effect of a rising demand for bullion possession. Short sales that drive down the price trigger stop-loss orders, which is what I was talking about, those stops, that automatically lead to individual sales of bullion holdings once their loss limits are reached. In other words, other people start to get nervous who have the physical and say, oh my God, I got to get out. I don't, whatever, I have a lot or I don't have a lot, a little bit, I got to get out now. I don't like what I'm seeing. It's all about perception. You have no idea how rewarded whoever decides to hang on. Like I've been warning you about this. So it's not like this is news. It's not like I got to scramble tonight. Oh my God, I didn't expect this. Oh my God, this is destruction of the silver and gold. What am I going to, holy crap, what am I going to tell my subscribers? I've been telling them for the last 2 to 3 years to get freaking gold and silver and it's being destroyed. What can I tell them tonight? I don't have to tell you anything special. I've already told you to expect this. It's here happening now. I told you to expect Bitcoin to get absolutely slaughtered. And it did. And then the next day, they were pounding it again even worse. And they had to halt all trading in Bitcoin at $79 after it got crushed. No more trading. Done for 12 hours. Don't even look at Bitcoin. I said it. It happened the next freaking day. I'm not trying to toot my own horn like I knew this was. I even said it. I didn't know it was going to happen the next freaking day. And I went on to talk about stuff like this. Silver, they're going to smash it. It's happening now. The collapse is going to start shortly. They got to prepare in advance. They've got to crush the prices first so that then they can let loose on the US dollar crap, let loose on the euro crap, followed by us after the euro, as Lindsey Williams said would happen. And then people can get a little upset and the bond market can go a little crazy and the interest rates and the, oh my gosh, US dollar doesn't matter. Then Ben Bernanke can stand out there where I'm going to devalue the US dollar. And then he devalues the US dollar, gold and silver go back where they were. So imagine if it's $15 an ounce for silver, right? Just bear with me. $15 an ounce for silver is where this ends. I'm making this up. I don't know where it's going to go. $15 an ounce. A few months later, major economic problems. Ben Bernanke comes out like he said he would in 2002 and do the 5th thing he said he would do if he was in charge. He's already done 4 of the 5 things, as I mentioned the other day in 2002. About if we were facing the depressionary economic problems again like that, he rattled off 5 things. Take the interest rates down to 0, give basically money to the banks, extra money to help cushion them, blah, blah, blah. He's done all 4 of the 5. Not all 4, but 4 of the 5. The 5th and final thing he said he would do, which I've mentioned 1,000 times already, he would devalue the dollar. You can't be devaluing the dollar when gold's $1,700, $1,800, silver's $35, $40 an ounce, and then it's going to double like that. They can't. I said they couldn't do it, and they're not going to. that will crush those first, because those are indicators. That's like a temperature gauge. Hey, what temperature is it? It feels hot. I'm sweating profusely. How hot is it in here? My face is actually burning. And then you look over at the temperature gauge, 65. So you're going to say either I'm having a midlife crisis right now, I'm having like some kind of hot flash, like a older, some of the older women get, hot flashes, or that damn thermometer is broken. So, on further inspection, the thermometer is broken. It really is 95 degrees in here. It's not 65. That's why you're sweating. And when you look around, oh, everybody else is sweating too. Some other indicators that this thing is lying. And this thing that's lying right now is the gold and silver prices. It's fake. So you turn to that. Well, if there's confidence in the dollar problems and exchange rate problems with the dollar, what is gold and silver doing? That's the key. We always know to look at gold. Oh, they're getting crushed. They're destroyed. Guess the exchange rate and the dollar's fine. They're pulling the wool over your face. Let me continue reading. I just got to get off on there and to give you full insight on where we're going with this, how much sense this needs to make to you. So he goes on to talk about Andrew Maguire. Andrew Maguire is the same guy that called the CFTC, the same regulators who are sitting there with their hands tied right now and Friday as JP Morgan's client massively dumped their positions on the market to crush the price. Hands tied behind their back. Oh yeah, we're still investigating. Haven't come to a conclusion. 4 years later, whatever. Still investigating. Can't seem to find anything. I told you why they won't find anything. You think the CFTC, government agency, regulatory agency, is going to find its bigger brother, bigger government, Federal Reserve, U.S. government, guilty? This is a national security issue, technically speaking. There's not a chance in hell that they're going to find anything with that. Unless someone grows the balls in the CFTC to say, I've had enough. This isn't the America I knew of, and I'm not going to stand by and lie to people. Why technically, anybody who invested in precious metals as an investment, your investment, your livelihood, your financial life is being dictated, is being controlled by the Federal Reserve ultimately. Behind the scenes, not public knowledge, they're manipulating your retirement for the safety of this paper fiat currency. If you have it out of their system, it doesn't hurt you too bad. Although the paper price today, right now, $24.65, does affect me because I got physical silver, and if I want to sell it right now, I'm only going to get $24.65, right? Of course, there's some higher premiums because nobody can get it. The point is, they're causing the heartache and pain. This is something a lawsuit should be filed against them to call them out, to actually force the CFTC and the CME group, which owns the COMEX, to show who did the dumping. You've got damage. Your investment was crushed. File a lawsuit. CFTC and CME group, we need the records of March 14th, 2013 and March 12th, 2013. We need to see who was selling massively on the market. And they'll say, oh, it went through, it looks like it was JP Morgan's account. Yep, JP Morgan did those trades. Oh, really? So then we'll attach JP Morgan to the lawsuit. JP Morgan, show us your records of which client was dumping those trades on the market. We had an office fire, Your Honor. We were gathering the records, had a bunch of them, had it all boxed up, and office fire occurred. Can't give you the records. Sorry about that. It's the U.S. government whose name you're going to see in those records. Okay, it's the Federal Reserve, as you were fixing to find out. Andrew Maguire, as I was saying, was the guy that blew the whistle, called the CFTC twice, and told them the boys, the club, is fixing to rig the silver market today after the non-farm payroll status comes out, immediately when that report comes out, they're dumping silver on the market. They're rigging the market to drop the price at this time and this date. Please take a look at that. Okay, well, thank you for the call. He was right. About a month later, called the same guy, the guy in the enforcement division of the CFTC. Hey, it's me again. You saw they did it? Yeah, we did. Listen, they're going to do it again today at noon. Do you think that I could call you live while this happens? And it's going to be precisely at noon. They're going to do it again. I just want to be on the phone with you when this happens. Would that be okay? Yeah, sure. Guess what happened? Precisely what he said. So then he went on to proceed to tell the guy, I've been recording our phone conversations this whole time, as well as the last month when you and I would have conversations back and forth, to bring your attention, in the world's attention, that this is being rigged, and you're now aware of it as a government agency, regulatory agency. You need to act on this information because it's accurate, and it can't possibly be accurate twice in a row, perfectly timed, without there being rigging going on. So I'm not going to go too far publicly with this until I see what you guys do. And he waited and then decided to release the information. Maybe he felt the CFTC wasn't going to do anything and said, okay, I'll go ahead and release the information now. That's who Andrew Maguire is. So he went to a hearing over in London, I believe, because we have the COMEX here, we have the LBMA over there. And him and his wife got in a hit-and-run car accident as they were leaving the courthouse. Never heard a peep of who it was that hit him. The guy tried to run. Heard they kind of caught him or something. Don't know who it was and what happened. Probably a coincidence. Yeah, sure. So, according to Andrew Maguire, on Friday, April 12th, the first smashing I'm talking about here, 2 days ago, the Fed's agents hit the market with 500 tons of naked shorts, short position selling. 500 tons of paper. Normally, a short is when an investor thinks the price of a stock or commodity is going to fall. He wants to sell the item in advance of the fall, pocket the money, and then buy the item back after it falls in price, thus making money on the short sale. If he doesn't have the item, he borrows it from someone who does, putting up the cash collateral equal to the current market price. Then he sells the item, waits for it to fall in price, buys it back at the lower price, and returns it to the owner, who returns his collateral. If enough shorts are sold, the result can be to drive down the market price, which of course is exactly what happened. A naked short, on the other hand, is when the short seller does not have or borrow the item that he is shorting, but sells shorts regardless. In the paper gold market, the participants are betting on gold prices and are content with the monetary payment. Therefore, generally, as participants are not interested in taking delivery of the gold, naked shorts do not need to be covered with this physical metal. This is absurd, but this is actually how the market works, as I was explaining in the very beginning. In other words, with naked shorts, no physical metal is actually sold. Just a bunch of people betting. People ask me how I know the Fed is rigging the bullion price, and seem surprised that anyone would think the Federal Reserve and its bullion bank agents would do such a thing, despite the public knowledge that the Fed is rigging the bond market, and the banks, with the Fed's knowledge, rig the LIBOR rate. The Fed, remember from Timothy Geithner and them? The Fed came out and said, we kind of knew it. Remember the New York Fed, under Timothy Geithner's watch when he was there? We kind of knew they were rigging the market and didn't do anything about it, right? So they've admitted that they rigged rates in the bond market, but no, not in the silver. No, wouldn't do that. Right, exactly. So that's what he's saying. Despite the public knowledge that the Fed is rigging the bond market and the banks, with the Fed's knowledge, rig the LIBOR rate, the answer is that the circumstantial evidence is powerful. Consider the 500 tons of paper gold sold on Friday. Begin with the question, how many ounces is 500 tons? There are 2,000 pounds in a ton. 500 tons equals 1 million pounds. And there are 16 ounces to 1 pound, which comes to approximately 16 million ounces of net short, whatever, sales on Friday. Who has 16 million ounces of gold? At the beginning gold price that day of about $1,550, that comes to $24.8 billion. Who has that kind of money? That's what he said here. 16 million ounces of gold, $1,550 a piece for each ounce. That comes out to $24.8 billion. Who has that kind of money? Question mark. That's what he's got here. What happens when 500 tons of gold sales are dumped on the market at one time or on one day? Just instant 500 tons put on the market. A stampede occurs to sell, obviously, because there ain't enough buyers to scoop up $24.8 billion worth of gold on the market in a matter of minutes. But you're allowed to sell it all at once if you got paper derivatives, that naked shorts, as they say. So what happens when that's dumped in one day? Correct, it drives the price down. Investors who want to get out of large positions would spread sales out over time so as not to lower their sales proceeds. The sale took gold down by about $73 per ounce. That means the seller or sellers lost up to $73 16 million times, because 16 million ounces. Or almost to $1.168 billion loss. Would your investors be happy with you if you continually did stuff like this? $1 billion here, $500 million there, $300 million there. Loss, because you keep betting down that the price is going to go down in the gold market. And when you smash the market, you're losing money doing it. As I said before, who has that kind of money? A government has that kind of money. When you can press a button and hit print, you can afford to lose something that's nothing, right? If it's nothing and it took you nothing to print it, you didn't lose anything. That's what they're doing. And that's the point he's making here. Who can afford to lose that kind of money? Only a central bank that can print it. I believe that the authorities would like to drive, the powers that be is what he's saying, would like to drive the gold price further down and will, if they can, hit the gold market twice more next week and put gold at $1,400 an ounce or lower. He wrote this in regards to what happened on Friday, but he did not write this. I printed this early this morning. The gold and silver markets weren't open. They're smashing it again. Let me hit refresh just to see where it's at out of curiosity. It's about the same. Gold is down $37.50. It's down to $1,439. Let me read you what he wrote prior to this happening. This is the second time, the second smashing is occurring right now while I'm reading you this. I believe that the authorities would like to drive the gold price down further and will, if they can, and of course they can, hit the gold market twice. So that's what he's saying, if they can. Not that if they can bring it down, but I think what he's saying is if they can hit the gold market twice more next week. Well, that's now. Next week starts now because the gold market turns on tonight and it's on the trading. So it sounds like this guy knows what he's talking about. And wants to get gold at $1,400 per ounce or lower. The successive declines could perhaps spook individual holders of physical gold and result in actual net sales of physical gold as people reduce their holdings of the metal out of fear. If you think I'm even selling one of my little dimes, my little 1964 dimes, 90% silver, or as they call it, junk silver, I won't even sell one of those. As I told you, don't subscribe to me, don't listen to me if you're not in this for the long haul. And as I said before, I'll say again, from 2 years ago when I really started talking about this stuff. When I use the word long haul, I'm only talking several years, few years. Not decades, okay? Not 10 years, a few years. You're going to see this happen soon enough. Price go way up. So here we go. However, bullion dealer Bill Haynes told KingWorldNews.com that last Friday bullion purchasers among the public outpaced sellers by 50-1. So as they're dropping the market, as I said would happen, not trying to make myself sound like King J Snip 4. I just study the hell out of this. I know how this whole thing works. I'm trying to relay that. I've said it a million times, and I got to tell you that I've said it. So, oh yeah, you did say that. You did say that. So I don't sound like I'm pretending I said it. You know I said it. You go look at my videos. I said that it's a double-edged sword. When they drop the price down too low, a lot of people get in and want to buy the physical. And they need to drop the price low because they're got their agenda going on. But they're running out of silver and gold doing it. So it's a double-edged sword. We're running out of it, but when we drop it, people are buying physical. We're running out of physical. We can't let it go too high because then people will realize the dollar sucks and gold and silver is real money and that's going to save them. We can't have that. They don't know what to do to fix that other than do this. Just drop the market. They'll go long, as Jim Sinclair said. They'll go long when they're done with this. And when they do, they'll be making massive profits all the way up. JP Morgan, quarterly profits. Goldman Sachs, quarterly profits. They'll be in before you and I understand to get in. They'll already be in the market when they know the bottom's in because they're the ones doing it. They're all in cahoots with each other, so they know when their bottom is and when they're going to go in and make a ton of money. So, however, bullion dealer Bill Haynes told King World News that the last Friday bullion purchasers among the public outpaced the sellers of physical. So buyers were buying for every one person that came in to sell, this bullion dealer said, for every one person that said, I want to sell my gold or silver, 50 more were saying, I want to buy. What do you got? People are waking up. Guys like me are doing their job. This is fantastic. These central bankers, these elitists, are going to be in deep crap soon. So he says the outpaced sellers 50-1 and that the premiums over the spot price on gold and silver coins are the highest in decades. I myself checked with Gainesville coins, which I personally, back in Florida, I could drive over there where I was at. And even though it was Gainesville coins, they're actually in Lutz, Florida, which is near Tampa. I've drove over there several times to pick up some purchases. So I know exactly who he's talking about. He says he checked himself with Gainesville coins and was told that far more buyers than sellers had responded to the price drop. So they're trying to shake the old silver tree, get out of here. And something strange is happening. It's like a bunch of squirrels seeing nuts dropping. Hey, let's go to the source. Let's climb the tree and get them. No. We don't want you climbing the tree. Get down. Oopsie. Too late. Pandora's box has been opened. People understand what's going on. And they understand it's time to buy right now. So, unless the authorities or the powers that be have the actual metal with which to back up the short selling, and they don't, they could be met with demands for deliveries continually. And that's going to happen. Unable to cover the shorts with real metal, the scheme would be exposed. Not only that, as they drop the price of silver and gold, it becomes easier, financially easier, for investors to demand delivery. Because if silver's, just bear with me, $100 an ounce, and you have a 5,000 ounce contract, which is a full-size futures contract. $100, 5,000 ounces. Okay? Then you say the price drops to $10 an ounce times 5,000 ounces. What is that, 500,000 down to 100,000 or whatever? Roughly, something like that. $500,000. $500,000 when it was $100 now. Matter of fact, make sure my bozo mind isn't screwing with me. 5,000 times $100. Yes, $500,000. It's a lot easier for some investors or companies or whatever to come up with $100,000 than it is to come up with $500,000. Because that's what it would cost to buy out and deliver, have a delivery of one of those contracts at $100 silver. So, of course, we're not at $100. We're at roughly $30 recently. But imagine if they dropped it to $10. You think there's people going to be going in the market to say, hey, I don't even want to play the futures contract. Here's my down payment, whatever I need to get me in the contract. Here's the rest of the money instantly. I want to demand delivery. I don't care what the price does. I want to demand delivery because I can't get it anywhere else. COMEX going to be in deep trouble. COMEX going to be in deep trouble. I did a video a while back about something like, I think I know where the next false flag might be, the COMEX or Chicago, near the Sears Tower, or it's called something else now, not the Sears Tower anymore. It's still the same damn tower. But in the whole city block area of that tower, guess what's there? CME Group and all their little buddies. You don't suppose that a terrorist attack could happen there and shut the market down just in the most inopportune time, do you? No. It'll be probably Iran or Korea. It won't be the boys. It won't be the bankers. No. No, come on. That's conspiracy talk. I pray to God that doesn't happen. And I hope they just get exposed and they weren't ready for it and they get crushed. That would be nice for once. But trust me, they're prepared. They've prepared way in advance for stuff like this. So he says, do the authorities have the metal in which to cover the shorts? I do not know. I know. No, they don't. However, knowledgeable dealers are suspicious. Some think that U.S. physical stocks of gold were used up in sales and efforts to disrupt the rise in gold price from $272 in December of 2000 to $1,900 in 2011. They point to Germany's recent request that the U.S. return their gold that's stored over here in the U.S., and the U.S. government's reply that it would return the gold in 7 years, a little bit at a time. That's circumstantial evidence, but damn, is that pretty powerful circumstantial evidence. If the U.S. has the gold, then why not return it right away? That's what he's saying here. The clear implication is that the U.S. cannot deliver the gold and silver. Andrew Maguire also reports that foreign central banks, especially China, are loading the boat on physical gold at the low prices made possible by the short selling. If central banks are using their U.S. dollar holdings, like China, to purchase bullion at bargain prices, the likely result will be pressure on the dollar's exchange value and a declining market supply of physical bullion, which is pretty much what's happening. It just started. In other words, by trying to protect the dollar from its quantitative easing policy, the Federal Reserve did, the Fed might be hastening the dollar's demise, which, again, they are preparing for, which is why they are smashing it now. So you know where, like Lindsey Williams said, we know where we are on the timeline. So, possibly the Fed fears a dollar crisis or derivative blowup is nearing and is trying to reset the gold/dollar price prior to the outbreak of trouble. If ill winds are forecast, the Fed might feel it is better positioned to deal with crises if the price of bullion is lower to begin with, and confidence in bullion as a refuge has been shaken. Oh, don't go there. They destroyed it. And he's mentioned something good here, which is great because I kind of forgot about it, and then he reminded me about it. That just happened recently with Goldman Sachs and someone else saying, oh, I said it the other day, George Soros. Gold has been proven recently with the downward price movement that it's no longer a safe haven. And since when in the hell do these guys and their bankers, friends, and the banks themselves come out in advance to tell the little guy, hey, buddy, here you go. You can make some money with our advice. They never, ever on their lives will come out and tell you in advance of a good move you should make. It's always the opposite. Everything Goldman Sachs has told their investors, we're going to do this, we're going to do that, they turned around and did the damn opposite, crashed the housing market and made billions because they bet the opposite after telling all their investors they were going to go into the housing market on the rising prices. They went out and shorted it and destroyed it. But this time they wanted to tell everyone a few days ago, gold and stuff probably going to go down. And then they can say, see, we told you so, look. That's because they want you to be scared to go into that metal. They are running low, very low. It's very desperate. Again, 2-day period, 10% was yanked out of the COMEX silver. This is nuts. They can't deal with that. They will be cleaned out in no time. They had to crash the price. It is go time. So in addition to short selling that is clearly intended to drive down the gold price, orchestration is also indicated by the advanced announcement this month, which is what I'm talking about, first from brokerage houses and then from Goldman Sachs and George Soros, that hedge funds and institutional investors would be selling their gold positions. The purpose of these announcements was to encourage individual investors to get out of gold before the big boys did. Does anyone believe that hedge funds and Wall Street would announce their sales in advance so that the small guy, or he says the small fry, can get out of the gold at a higher price than they can? You know, absurd. If these advanced announcements are not orchestration, then what are they for? Why did they say it? To help you out? Yeah, okay, right. I see the orchestrated effort to suppress the price of gold and silver as a sign that the authorities are frightened to death, that trouble is brewing, that they cannot control unless there is strong confidence in the dollar. Otherwise, what is the point of the heavy short selling and orchestrated announcements of gold sales in advance of the sales? Spot on. And did I mention for the 15th time, this man was the former assistant U.S. Secretary of Treasury. U.S. Treasury Secretary. Is this guy, Paul Craig Roberts, is he J-Snip 4? Guy doing, videos with freaking wallboard sitting next to him because he still hadn't had a chance to do his green screen thing? No. He's one of those guys that's a source that you can say, hey, look what he said. I didn't say it. Of course, I've been saying it, but again, I'm the guy with the wallboard sitting behind him who has a very intelligent mind, by the way, who has been leading you down the right path, by the way. So I do have some credibility, but I love when someone like this comes out and says that, and then I can read it, and then as I'm reading it, oh, I said that. Oh, yeah, I said that too. Oh, yeah, I used to warn you guys about that. Oh, I said this was coming. It makes me feel good that I know that the stuff that I'm researching and then relaying to you is actually solid. The worst thing I would ever feel is if I was wrong about all the crap I've ever talked about. Especially silver, right? Because I focus a lot on that. I'd feel terrible. I led these guys down the wrong path. I led myself down the wrong path. I invested all this money into silver. Worst decision of my life. I can't believe I was telling these people that trusted me on YouTube and stuff. I got 8,000 subscribers roughly, and I'd feel like a craphead. I would. I'd come out here and apologize so much to you, it'd be insane. But I saw this, and then tonight again, bang. It is go time. Have that credit card on standby, because I don't know where the bottom's fixing to be. But I can pretty much assure you that wherever the bottom is, it's going to leave the bottom and go back up pretty rapidly. When I'm hearing 50-to-1 sales versus, buyers, purchasers versus the sellers in gold, physical and silver, that is telling me people are awake. It ain't going to work this time. The shaking of the tree to, investor confidence in gold and silver ain't going to happen. I can't wait, because Bart Chilton of the CFTC, the only guy who comes out and talks and tries to let us know that we're still looking, we're still trying to fight for you guys in the silver market, and I'm trying to get the position limits put in place, and, he'll be out soon. He'll be out real soon to try to tell everybody, I can't wait to hear what old Bart has to say. I'd probably rather listen to Bart Simpson. He probably could give me more information than Bart Chilton. But Jill Sommers, I think is her name. And then there's what I like to call Gary the Turd Burglar Gensler, who is the head of the CFTC. Right, these guys, former bankers, you don't think for a second they're actually going to do their job and incriminate and charge and, prosecute the Federal Reserve through JP Morgan, because that's who's the one shorting it and causing these price movements. It's the Federal Reserve. This guy nailed it. It's the government. That's who's doing it. So the government says, okay, if you're invested in the Dow Jones, you're a good little sheep. You get a little reward because recently, boy, that no doubt. Matter of fact, where's my phone? Dow Jones. It's got silver and gold destroyed on Friday. Silver and gold destroyed. Oh, I can't look now because it's not over in the excess market. So never mind. I was gonna say, what's the Dow at? It's probably breaking records right now. While gold and silver, for some reason, and other commodities, gas and everything else, electricity, wheat, corn, not really much going on over there. But gold and silver, dumping it. And again, who the hell has $24.8 billion to play with this and then dump it like that? Just, it's insane. There's only a government, or as he said, only a central bank that can print money can do that. And he's right. And just where is the COMEX and these paper markets located? In the United States of America. And just where is the price set for those items? In the United States of America. And does the United States of America have a central bank that is not controlled by any other force in the world that can print its own money whenever it wants? Yes, it does. You see, if this was a nation over in the EU, like let's say, for example, Greece or Cyprus, and they had the market control for the Eurozone over there, they wouldn't be able to use their central bank. They would have to use the ECB, European Central Bank, because it's a union. So the country couldn't do it, but the Eurozone could do it, technically. We don't really have that problem. We just do it because we got it all here. Our market, our system, our COMEX, our government, our Federal Reserve, it's all right here in the same soil. Let me ask you something. Does my face right now look like I just got slaughtered? Like I just, oh my God, oh, silver, oh, sick to my, do I look that way? No. I did look that way when I lost that $3,000 from JP Morgan. And then, of course, I had to join that class action lawsuit, which I have no idea what the hell happened with that. Doesn't seem like it's going anywhere. Least of my worries or concerns right now, because by me doing videos like this and telling other people, get physical silver, get physical silver, get physical silver, there's more pleasure in that, knowing it is killing them and the Federal Reserve and the bankers. So I'm getting my revenge by buying physical, telling you to buy physical, and it will be the most rewarding thing you ever did. You have got, like Jim Sinclair has been saying, you have got to stomach these moves. That's why old JSNIP 4 has come out multiple times, especially recently, if you've noticed, to remind you and re-remind you, I'm feeling a crushing coming in the silver and gold market. Stand strong and get ready to buy some more. Get ready to max out the credit card. The good thing is that a lot of these silver bullion places, or bullion places, period, you can, even though it says delay, can't buy it, expecting next, wait till next month to get Silver Eagles or whatever. The good thing is you can still go hit the buy button right now. Buy, bingo, I'm locked in, here's my money, I'll see you in 30 days. And it doesn't matter what the price does. Even if the price goes down, you're still locked in, and you got to pay it because you've already paid it. If the price goes up, doesn't matter, you're locked in. I just can't wait for the day that occurs. Hey, all right, they're crashed. No one's got silver. I'm gonna go online and buy some. 2-month delay. Holy crap! I've never seen that, but that's all right. I swipe my card online. Done. Whew. I'm locked in. And then 2 months goes by, and you get a call or an email from the bullion dealer. I know you bought this 2 months ago. We were expecting it now. We just got a call. No idea when we're gonna get it back. So I'm sorry to inform you, but I have to give you a refund. And now the price has already went crazy high. I hope that doesn't happen. I'm not saying that I know that will happen, but it could happen. Which is why I like to know, and it's a fact, that I've got my silver already. I've already met a couple of goals that I had. And like I said, I wish I had some more money at the moment to buy some more silver, because I would probably be on there this week. I would like to see where I feel it's going to stop the slaughter. As he said, he's thinking they may do it 2 more times this week. Boy, they sure didn't wait, did they? Friday, end of the week for that. Sunday night, technically Monday in China or wherever, the markets are back open. They're already slamming it. So if they're slamming it today, he's expecting they may do it another time this week. What if they do it all week? Tuesday, Wednesday, Monday, Tuesday, Wednesday, Thursday, Friday. Silver's crushed. As I said, you realize that $24, let's see if it moved, $24.51. Oh, it went up a few pennies, $24.59. They cannot mine it out of the ground. I was just reading, check this out, Silver Doctors. 16% of annual silver that comes into the U.S., that we produce out of the U.S., comes out of this mine. Venia Grande. According to Rio Tinto's, that's the guy's name. According to Rio Tinto's Vice President of Marketing, Venia Grande, Kennecott, that's the company, Kennecott, produces up to 5 million ounces of silver and 500,000 ounces of gold annually. Quote, we produce about 3 million to 5 million ounces of silver each year and 300,000 to 500,000 ounces of gold. That's what he said, end quote. The total U.S. mine output for silver in 2012 was 1,050 tons. Okay, the total U.S. mine output for silver in 2012 was 1,050 tons, or 30.6 million ounces. And U.S. gold production was 230 tons. Keeping in mind, they just sold 500 tons on the market on Friday, paper. And when I click on this, I guess they had a little problem at the mine. And that amount roughly is 16%. They contribute roughly those numbers I gave you, they're contributing roughly 16% to the silver that is mined in America every year. They're 16% roughly of what we get. And here's a little news story for you regarding this place. Kennecott, Utah Copper's Bingham Mine Pit wall slide. What's this? At 9:30 p.m. local time on the 10th of April, 2013, this mine experienced a slide along a geotechnical fault line of its northern eastern wall. Movement on the northeastern wall had accelerated in recent weeks, and preemptive measures were taken to relocate facilities and roads prior to the slide. All employees are safe and accounted for. Mine operations are currently suspended. Mine operations are currently suspended while experts assess the extent of the slide and impact on operations. Rio Tinto is a leading international mining group headquartered in the UK, blah, blah, blah. So, this happened on the 10th. 2 days later, we have a massive crushing on gold and silver. Sunday night, tonight, another slaughter is taking place. You don't suppose that they kind of fast forwarded their plans after hearing this mine got crushed, literally crushed, and a landslide occurred, and now they can't mine there till further notice. I have no idea how long that's going to take them to fix. But that's 16% of U.S. silver. And if we're already running low on supplies, and the mint, U.S. Mint, is already rationing Silver Eagles, which is against the law. The law states the U.S. Mint must have an amount of Silver Eagles on hand, ready for purchases for all of the public. A sufficient amount must always be in place. December 2012, they ran out. We'll see you guys the second week of January. That came. A month later, we're out again. Sorry about that. A little delay again. Fast forward, we're in April now. Technically, I don't know if this, I guess it was this month, April. Delay. We're rationing to the primary dealers. We don't have enough for everybody. So after December, January, and now April, U.S. Mint hasn't figured out they need more silver. Oh, they figured it out. They know they do. But if the silver ain't there in the quantities they need it, because there isn't physical silver there, they can't make it appear, can they? They just have to, well, we're going to ration, we're going to do this, there's going to be a delay while the prices are being crushed. This is all a plan. It's all making sense. Don't lose hope. Don't lose faith in the silver prices. Hold your freaking silver and just wait, like I said. Don't play with your emotions. If you want to go play the paper game, you'd have just been slaughtered like I was in 2008. You'd have been crushed. So, Anyways, sorry for the long video, but it was absolutely necessary that I explain this in detail and read that to you. Take care.